we are currently waiting for the moderator to join. So let's go ahead and get started. I am confident that our moderator is going to be joining here in just very shortly. Hello, everybody. My name is Carrie Naoni. I am the Executive Director of TIE Oregon. Thank you all for being here. This is the first of several webinars that we will be producing throughout the next couple of months, where we will explore how to survive the COVID-19 pandemic. We have an outstanding panel lined up today. But first and foremost, I want to take the time to thank our sponsors, of which you can see on the screen. They've been so gracious throughout the years in sponsoring and promoting and helping TIE along the way. So if you are in need of lawyers or accountants or service providers, please take a look at the folks that are on your screen and make note, because they are here to help you, as they are here to support TIE. So thank you to our sponsors. We have an amazing panel lined up today and a couple of housekeeping items. Each one of our panelists will give a brief presentation, and then we will have time at the end for Q&A. Please use the chat box to submit your questions, and we will try to get to as many questions as possible. There are going to be numerous people on the line today, so again, we will try to get to as many questions as possible. This presentation is also being recorded, and if we don't get to one of your questions, we will do our best to answer those questions offline. Now, if you are a panelist, I think everybody's online at this point, except for our moderator, who's I'm hopeful that he gets the correct link and logs on. I'll work with him in just a minute. So because he's not here, I'm going to go ahead and let's just go ahead and get started, Allie. If you could go ahead and introduce yourself. The first up on our panel is Allie Magar, who is the founder of Hub, and she's been doing some critical steps to make sure that Hub is in a good place to survive this COVID-19 pandemic. And with that, I'm going to turn it over to Allie, and I'm going to turn my efforts to Nitin and see how I can assist him in getting online. Allie?
Awesome. Thanks, Gary. And just, I think Nitin may not be listed as the panelist, so I was just texting with him. I think this was originally meant to be a Q&A, so I will try to facilitate some Q&A myself and maybe share some resources of what we've been doing. But for those of you that I haven't met, I'm Allie Magyar, and I'm the founder and CEO of Hub. And this Hub is software for the meetings and events industry. So I'm sure you guys could probably recognize how decimating that is in today's world, because every event that we were working on, whether it was a large citywide of 40 to 50,000 people to a smaller 300-person meeting, every single one of those have been canceled, not only for the next couple of months, but for the foreseeable future. So there has been a lot happening within our company to figure out how to pivot, how we look at this as an opportunity to be able to adjust to provide what's actually needed in our market. I've been an entrepreneur since I was 18, and I'll be 40 this year, so 22 years. And in 2008, when we had the financial crisis, I had just bought my meeting planning agency. So I've been through some dips below before, but I have never experienced anything to the volume of what we're experiencing right now. Oh, there's Nitin.
Hey.
Hey.
I don't know what happened. All right.
Sorry about that.
No worries.
So what we did, Nitin, is we went ahead and turned the baton over to Allie.
Okay,
so we'll
good. Sounds good. Yep. Okay.
So Nitin, literally all I did was just give an overview of my background and how hard hit our industry is, and talked a little bit about pivoting. I would say in any company that any person is in right now, the most important thing is to, well, first, it's hard not to feel extremely overwhelmed. And I would say that even as an experienced entrepreneur with 22 years experience, I've been through some tough shit before, but this is really, really tough. And right now, not only do I have Hub, which is our software, but I also still own my agency that's been planning live events, and it's of equal size to Hub. And so figuring out how to make a business survive and thrive, the situation is what it is. And I could spend all day being extremely overwhelmed and being in tears. And there are definitely moments of that. Last night, my kids didn't know what the hell to do with me because I got home, they offered to cook me dinner, and I just started bawling. And so there's still moments of that, but I also look at it of we have to be scrappy and we have to look and say, okay, well, this is our world. There's no point in being angry about it. We have to figure out how to adapt to it. And so with Hub, as soon as we saw things start to cancel, we provide software for live events. And we immediately said, well, our software works in virtual events, so let's pivot. And we as soon as we saw this happening to our industry, we started hosting weekly webinars. We started being a thought leader in the industry about what it meant to turn to virtual. We got our development team to stop everything they were doing and quickly put some new pieces in the product that would help with virtual. And so there's just ways of looking at opportunity right now, and I'm taking it back to the basics. It's basically, all right, I'm going to have a new company. And so what does that company look like? And what is our go-to-market strategy so that we manage our cash flow and make sure that no matter what happens to our industry, if live events return or if they don't return over the next 12 months, that I have a way of running a viable business.
Okay. Sabrina?
Sorry, I was just unmuting. Thanks, Nitin. Allie, thanks so much for that. I've been watching the way you guys have pivoted, and I hope that other small businesses can start to see some examples and understand maybe how they can do it as well. I'm Sabrina Parsons. I'm the CEO of Palo Alto Software. I'm also on the board for the Oregon Growth Board and also on the board of Oregon Community Foundation. And so Nitin wanted me to talk a little bit about what Oregon Growth Board is doing, and it's actually in conjunction with OCF, as well as various other foundations and other organizations that really want to step up right now and help Oregon businesses. I think that if you have the skills and can understand how to pivot like Allie has done, you're in good shape. We know that a lot of the small businesses, rural, that maybe don't have the tech skills, maybe can't really understand or don't know how to be agile and don't know how to pivot, and they need more help and they need technical assistance. So a couple of things happened over the last 2 weeks. Oregon Growth Board called an emergency meeting basically wanted to get the board together to see what we can immediately do to support businesses in Oregon in the wake of the current COVID crisis. And we all know we have to stay at home, but we all know that it is devastating our small businesses and doing that very, very, very quickly from one day to the next. I'm sure you guys have all heard the statistics, but I'm just going to put it out there because I think when you actually hear.
Can I interrupt you for a minute? So are we going through the intros or do we already do the intros? I'm sorry, I landed in the middle of this. Sabrina?
So what we were going to do is just turn it over to each one of the panelists to give like a brief overview, and then we were going to do the Q&A at the end.
Oh,
so
okay,
we're on to Sabrina at this point. Yep.
Okay, sounds good. Okay.
So what I was going to say is just to give everybody the sense of, we all know, but I think when you hear the numbers, during the 07 to 09 recession, the worst week of unemployment filings during that 3 years was 645,000 people filed for unemployment in 1 week. And that was the worst number in those 3 years. Last week, over 3 million people filed for unemployment. So it's just, it gives people that sense of this has gone from 0 to 100 miles per hour. So what Oregon Growth Board did was take some funds and immediately make them available through a couple of concepts to the Oregon Community Foundation Small Business Stabilization Fund. So OCF immediately created this fund, recognizing that small businesses in Oregon are going to need stabilization. OCF then reached out to organizations. Oregon Growth Board responded by approving two things. We approved Business Oregon's request to forgive existing loans to CDFIs so that we can strengthen CDFIs' financial position and their ability to continue small business lending. So that outstanding balance was about $585,000. And then the board also approved to request to commit the remaining funds currently available through the Oregon Growth Fund to the Small Business Stabilization Fund, and that's about $700,000. So that OCF fund, as of last week, had $1 million in it. Now it's a drop of a drop of a drop in the bucket, right, in terms of what small businesses need. And so the purpose is to really help organizations that are helping small businesses. So this money isn't intended to be directly invested in small businesses, but it's intended to stabilize anyone providing technical assistance, CDFIs who are out there providing loans today, and just to make it available to other organizations that are in that category of helping small businesses. Now, again, it's a drop of a drop of a drop in the bucket of what all these businesses really need. And one of the things I heard Allie say, I think very eloquently, is talking about when she pivoted, understanding the implications for actual cash flow and what does that do for her business. And so I think that's one of the things that we need to help small businesses, especially those that aren't sophisticated, through some of these funds. So I'll be working with OCF as well as Oregon Growth Board to see how we can provide more technical assistance. But we need to help small businesses understand, can they pivot? What does that mean? Have they ever done a financial forecast before? And if not, how do we get them the tools and the knowledge to do that right away? And then also, about an hour ago, I was on a phone call with Senator Merkley, really urging him, and I'll be doing it tomorrow with Wyden, to understand that there's a lot of uncertainty right now with what the CARES Act really is. What does it mean for small businesses? What's the difference between the emergency disaster recovery loans and the payroll protection plan? How does that actually work? How do you apply? How do you get in line? What are the logistics? I don't know how much you guys are hearing, but we are getting bombarded at Palo Alto Software. We serve small businesses with all of these questions. The uncertainty of, what am I eligible for? What does it mean? Do I have to have personal guarantees? When do I have to pay it back? When can I get it? Can I get the money? That is a really big piece of the puzzle that I'm going to be working with Oregon Growth Board and OCF to try to solve. I really feel like we need to get our Oregon businesses information. And we also need to understand that while $355 billion is fantastic for small businesses, if you look at the payroll protection plan and you look at all the small businesses that are eligible in the United States, if we all apply, and we're eligible, Palo Alto Software has 80 employees, so we're eligible. If we all apply, it's only $12,000 per business. So it's not enough money, and there will be a line, and at some point the money will run out. So what we have to do for Oregon is we got to get in line first, and we got to get on top of helping our small businesses and helping provide all the information they need so that they can start applying, and they apply for the right things. For the right, you can't, the payroll protection plan won't allow you to get loan forgiveness for inventory. So if you need inventory, what do you apply for? How does the emergency disaster recovery loan work? where do you apply there? Because it's different places. So that's what I'm really going to try to be pushing for and working for is let's get Oregon our piece of the pie, and let's get in line first, and let's get the information to as many small businesses as possible.
Yeah, and Sabrina, it's been interesting as a small business, just what you're saying of trying to research, and I know way more about policy and legal and law than I ever probably wanted to know. The best advice that I got about that was making sure, looking at your current bank and looking at whether they are an SBA approved partner, and making sure that you call them right now, because you want to have existing relationships. And I think every bank is having webinars and they're talking about this, but you want to have an existing relationship with your bank, and you want to make sure that they are an SBA lender, because if not, you might want to go look at creating an account at an SBA lender bank to make sure that you're viewed as a customer, because they do get to prioritize their existing customers as well as women-owned and minority businesses. So there are some clauses, but it's really important that you call your banker right away and understand whether they are an SBA lender.
Absolutely.
Hey, Ellie,
Good advice.
yeah, Ellie, why don't you finish I'm sorry, I should have just stuck with you because you have some more things to talk about. So do you want to finish off all the things you plan to talk about, the steps that you've taken with your business specifically?
Sure. I think.
Can I jump in?
Yeah, go for
Can
it.
I just jump in real quick, Miss Scott? I just want to let people know all of those questions that Sabrina just threw out. That's exactly what I'm going to talk about here when I get up there. We'll be able to provide a lot of clarity around that. Hopefully, we don't run out of time. That's the only thing I'm worried about.
No, we won't. We won't. Ellie, you've got about 8 minutes to go through this.
Yeah, that's great. And Scott, I am excited to be on the phone because I have lots of questions for you about the affiliate rules. So any venture-backed or angel-backed startup, I think, is also feeling extremely anxious about the affiliate rule as it pertains to this SBA loan.
Yep. Yeah, for sure.
All right. Well, I'll just share sort of what our response was to thinking about how we manage cash flow and how we manage the company. And so I always organize by thinking about how I would present information. It's probably the meeting plan. But this just sort of said our current state. And we are really excited at Hub because we are getting unprecedented levels of interest in our virtual events offering. So our sales and marketing teams are actually busier than they have ever been. So that's a really positive thing. But at the same time, no one is actually signing on the dotted line or paying. And those are the things that actually move business forward. So there's a lot of uncertainty right now. We also just have a different way of working. Everyone is working from home, and that means that sometimes they're working on, satellite internet or not having good connectivity. So there's a whole new way that we have to figure out how to work and how to be efficient. We also have to look at reducing expenses every which way while still making sure that we can output what we need to for our virtual event offering. So we had to be really thoughtful in our approaches. And what I will say is that this approach changes every day because of new regulations that come out or a new understanding of laws that come out. And so for us, we have to be very nimble. We have to use our community. So my recommendation would be call your lawyers, call your bankers, call your accountants, call other, founders and CEOs that you know, and ask to share information. There's been a lot of value for me of being a part of a variety of different Slack groups. And as information is coming out, everyone is sharing what they know. And so it's really important that you're able to digest the information and the tools available to you. For Hub, we came up with a couple of key strategies. One was to look at our shared work program. So in the state of Washington, we can reduce hours as much as 50%, and then unemployment kicks in for the remaining unworked hours. So what this means for the majority of our team is that we can reduce hours and they are able to claim unemployment for the hours they're not working, but we could literally cut everyone to 50% if we needed to, so that we can still get the minimum done for the company, but the employees are still making 80 to 90% of their salaries based on their annual wages. So for us, this is a huge program where we don't have to let everyone go, and we could take advantage of that. What I would say about these shared work programs is that everyone in government is overwhelmed. And so we applied almost 2.5 weeks ago for this program. They told us that they would have an approval back within a week, and we have not heard anything from anyone, and it's impossible to get people on the phone. So if you haven't turned in a shared work program application yet, I would encourage you to turn one in as soon as possible. They literally process them by date that they were turned in, but it can be an incredible opportunity for your team to still be able to work part-time, but still be able to maintain the majority of their salary. The other option that's available to people is we have some key performers that we absolutely need as a part of our company long-term. And so the Emergency Leave Act allows employees to take up to 3 months of care for dependents. So for anyone that's affected and going crazy by having kids in your house 24/7 that can't go outside and play and don't want to do e-learning, this can be really tough to try to balance. So whether that's they need to take 2 days a week or whether they need to take every day for 12 weeks, you're able to reduce their salary by 1/3. And then also you can claim a tax credit back against your Social Security taxes that allows some relief. Now the timing of that has been uncertain. They've said maybe quarterly, maybe monthly. So, you know, our panel probably have more information than I do on this, but this was another way of people that are A, players for us, but that they're in sort of unknown circumstances of taking care of kids or taking care of someone that might be sick with COVID. This allows them or allows you to be able to reduce salary and then also get a pretty substantial tax credit for each employee. It's up to $200 a day or $10,000 total.
Hey, Ali, I just want to interrupt you for a minute. On the workshare program, I guess these programs are state dependent.
They are.
So some states don't offer it. And I know in Oregon, because we looked at it from First Insight standpoint, and the sense we got was that there's no way we'd cover 80 to 90% of the salary through unemployment. Those reimbursements are much lower in Oregon because our contributions are much lower. Maybe they're higher in Washington. So just wanted to let people know that they should go explore. If you're an Oregon-based company, make sure that you have accurate information for your employees in terms of what the unemployment would look like for them.
Yeah, and if
Go
anyone
ahead.
needs a calculator for that, I have an Excel sheet that we've been using as a calculator for all these different programs. Obviously, you would need to understand the percentage that Oregon provides.
Yeah.
And obviously, the higher in salary, if you're making over 6 figures, well, then the lower percentage of your income you're going to make because unemployment really doesn't
Yeah.
cover 6 figures.
Yeah, it caps out at a certain amount. Okay, go ahead.
We also immediately looked at general expense reduction. So we shut our offices 2 weeks ago, and obviously we're not even allowed to be in our offices for another 30 days. So we immediately went to our landlord and talked about how we could get relief from rent. We immediately stopped all cleaning, all supplies, all food, all parking. Basically, we went back and said, what is essential right now? And it means making some really tough calls. We had a 401k match that, you know, our people really depended on, but we're not able to offer that as a perk right now. So we looked at every non-essential cost that we had across the company to be able to find cost savings. And again, each of these strategies has a risk associated to it. So we had a conversation as a team and said, okay, here's what we're planning on doing. What are the risks that we have to be willing to be able to deal with if these things end up happening? Because it's really important that there is transparency across your leadership team, across your board if you have one, and also across the employees to be very transparent of here's what we have to do to survive. And we know this doesn't come without risk. And then of course, furlough. So furlough, you know, there's lots of terms for different things. I mean, you could also do just layoffs if you needed to, but furlough allows you to be able to keep benefits for employees. So if you plan on just having a short-term loss of an employee for the next 30 days until you figure out and get a basis, furlough is an option where you could continue to pay their benefits and then they're able to claim unemployment. Because the hardship for most people in this is if they're claiming unemployment and they have to pay for benefits, that's extremely hard for people to be able to do. So if you're in a position to say in 30 days, I'm hoping we'll be able to hire these people back, Furlough can give you relief of their salary for that time frame, but allow you the ability to be able to pay for their benefits. Now, important factor there is that you need to call your benefit provider, because not all benefit providers allow you to do this. A lot of them are making exceptions. For example, Kaiser came to us and said, you know what, not only are we going to change the rule around this so that you can still pay benefits for people even if they don't have hours, but we're also giving you an extension on being able to pay these benefits. So if any employee isn't able to cover their dependent, we'll give you terms on these things so that no one loses their coverage. So you really have to lean into the partners that you're working with to ask them what's possible. And you won't know unless you ask the question. I mean, we are going to every single person that we're working with and saying, look, the events industry has been hard hit. Almost every industry has. Like, what can you do to work with us to make sure that we come out of this the other side stronger than we were, so that we can continue to grow our business with you, because otherwise there is no business to be had. So between all of these things, we were able to look at a cost savings of almost $500,000 in just 2.5 months. And that allows us to have the runway that we need, because the plan in 2.5 months is going to be very different than the plan that I think it's going to be right in this moment. So it literally is about taking every step immediately to be able to conserve your cash flow, to be able to give you the longest runway possible.
Thank you, Ali. I completely resonate with what you just presented. You know, not only do I invest in companies, and it's this advice that we're giving to all of our portfolio companies right now, which is extend your runway as far as you can, assume the worst case scenario, which means no incentive, no stimulus money, just get your runway as far as you can. And I'm actually doing that with my own company for Sinside. We're not venture backed anymore. And we live off cash flow, and cash flow is king. Anyway, I'm going to hand over to Scott Bossum to talk about the various lending programs. Scott is with Columbia Bank, and Scott, please introduce yourself and have at it. You've got about 10 minutes.
All right, appreciate it. Well, what's kind of crazy is literally as we were sitting here and I was listening to Ali, new information has come out. So I've actually got hot off the press within the last 5 minutes information, primarily about the Paycheck Protection Program. So briefly, so my name is Scott Bossum. I head the SBA department at Columbia Bank, based here in Portland. We're a bank based out of Tacoma, regionals, Oregon, Washington, Idaho. I used to work for the SBA in the Portland district office for about 7 years. Some of you on the call may know me from those days. And so we have just been trying to navigate this as information comes out. What you really have as far as resources are two primary tracks. And I'm going to mainly focus on the Paycheck Protection Program, but I wanted to touch on the disaster side as well. Those are the loans. The federal government loves acronyms. This particular acronym is really bad because it's EIDL, Economic Injury Disaster Loans. People refer to them as EIDL loans. I don't like to call a loan that I'm giving, trying to help somebody an EIDL loan. It seems kind of counterintuitive, but that's the same thing as a disaster loan. Those are direct loans with the federal government. Those are loans that banks and other lenders are not involved with. There's an application process. The system crashed about a week ago. I talked to somebody this morning that's been going through that. They have a new site. It's actually a COVID branded site that they've got up now. It's apparently an even more streamlined disaster application. So they've appeared to fix the system issues they were having. You could argue disaster is getting 40 to 50 times the normal volume that they see. Those disaster loans it's still very good money. It's a low rate. Nonprofits are eligible.
Scott, I just want to interrupt you for a minute. Do you have a presentation that you wanted to upload? Because we're not seeing anything.
No, I know. I'm going to, okay, hold on. I'll just share what, bear with me here. I'm going to go through the summary of the Paycheck Protection. So if you guys are seeing that now, I'm going to go through this in a second. The disaster funding again, I just wanted to touch on that briefly, and I can, we can take questions offline after the webinar too. But so this is what's on the screen now is a summary of the Paycheck Protection Program. I'm going to get into that here just in a second. So to continue on the disaster, their low rate, their extended terms. It's just the process has been quite cumbersome. And essentially what's evolved here as we've gone along is we now have this Paycheck Protection Program. So that is what a lot of people, even people that had already been pursuing disaster money, are looking at this Paycheck Protection Program because of the forgivable feature that is part of it. So you can, to clarify, if somebody is pursuing a disaster loan, they can still keep doing that. They can obtain a disaster loan, and they can also obtain a Paycheck Protection Program loan. They cannot use them for the same purposes. They have to be used for different, and we'll get into that here in a second. And they can't be for the same amount and the same purpose, essentially. But you can have one each of those loans. There's been a lot of conflicting information around that as this has evolved. The Paycheck Protection Program caps out at the disaster loan program caps out at $2 million. So that is the maximum that somebody can obtain there. What you're eligible for, you don't actually ask for an amount with either of these programs. There's a calculation that's going to determine essentially what you're eligible to obtain. On the disaster side, it's all about loss of revenue, and then the size of the business, what kind of overhead you have, bridging this next 6 to 12 months, and coming up with the disasters, looking at all of those factors and coming up with an amount that you're essentially eligible for to obtain through the disaster side. So as, again, the CARES Act was coming into more clarity towards the end of last week, middle to the end of last week, that's when people, again, started kind of refocusing on this Paycheck Protection Program because of that forgivable feature. There are some similarities between these, but that forgivable piece is the big difference, and it is truly turns it into a grant. Even if it's forgiven, normally a loan is forgiven, it turns into income. They do not have to report the income, so it's not a taxable income event. It's truly turned into a grant, essentially. So I want to walk through this on the screen here. This is a document that was put out by the U.S. Chamber of Commerce. This is the best one that I've seen. One of the things that I was going to be talking about, and this is what has evolved here, is there's a lot of confusing information out there where I have seen banks that are taking pre-applications, or they're sending out checklists to people and saying, start getting this stuff together, or they were giving the impression that applications were going to start right away. And the reality was that all of the lenders out there, we need to wait until the SBA provides the guidance around how we're supposed to process these Paycheck Protection loans. There's a lot of details. We knew a whole lot as of Friday last week when the act passed, the black and white kind of details of the program, but we didn't know exactly how SBA was going to have us process these deals. And so that's what we've been waiting for, and needing to wait to see what all those details were. Unfortunately, a lot of banks, again, were kind of knee-jerk reaction and sending out these things that, here, get this together or fill out this pre-application. Very misleading. What happened here in the last 10 minutes is SBA, it completely blows me away. They have officially come out with all the guidance on this. Because it happened 10 minutes ago, I haven't had a chance to digest any of it. I can tell you one of the things, for instance, is they created an application. So I saw one bank earlier that had their own application they created and a checklist of information. They were telling people, get all your W-2s together, make a list of all your employees with their annual compensation and what you paid them. I mean, all this stuff they were telling people to pull together, that's all buried actually within the application now that SBA has created. A lot of this is actually going to be self-certified by the applicant. So because what SBA has done is they've had to make this as quick as it can be for lenders like us and for other lenders that are going to join this program. There's a provision in the act that the Treasury Department can authorize other non-bank, non-SBA lenders to participate, and that is happening. There is no way that the banks alone can deploy all these funds. In a robust 7A lending year, the banks will do 20 to 25 billion collectively in a year. You could argue, as Sabrina was saying earlier, that you could see the entire activity of this happen in a 2-month period, $350 billion. And it boggles my mind when you compare that to what we normally see through the 7A program. So there will be other non-bank lenders joining it. They have to, if we are going to deploy this capital.
Can I ask you a question on something that a lot of have been asking me too? Is 350 billion the total amount to be loaned, or is 350 billion the amount that it will be forgiven? Like, are they loaning more than 350 billion and that's just what's forgiven? Like, what's your take on that?
Yeah, the 350 billion is the total lending allocated for this program. What ultimately gets forgiven will be something less. There is the ability for people to use this money for other things that just wouldn't be forgiven, or they could use it for a period after the 8 weeks. We'll get into that 8-week thing here in a second. That wouldn't be forgiven. So those loans will roll into a 10-year term loan, essentially, at a low rate, and then they would just, make repayments. So there's talk that if we saw this be exhausted, and I still don't know. I mean, like Sabrina said earlier, you break it down by business, and it's a very small amount. And then I don't even know if you factored in, Sabrina, there, like the nonprofit side. Nonprofits are eligible for this program.
I did.
Very large restaurant chains are eligible for this program potentially. Hotel
Hey,
chains.
Scott,
Yeah.
We're running out of time, so you got 3 minutes. But one quick question: is SBA loan? Is there a website for that where they have this on?
No. So, granted, so keep in mind. So what I'll do, I could talk for a couple hours with really good information for all of you guys. So I know we've got to cut it. This document I'm scrolling through here, it's got some very good details.
I put that document as a link in the chat. So if anybody wants to access that document, I agree with Scott. Out of everything I've seen, it's really comprehensive and simple. And Allie, it answers your questions too about sort of the total amount versus what's forgivable, because you can get 2.5 months of payroll, but only 8 weeks is forgivable. All of that is in there, and it's in a link in the Zoom webinar chat, so you can just click it, and at least it's very clear and simple to understand.
Yeah, it gets in the weeds a little bit with the forgiveness here. There's some different calculations there. It's based on keeping the employees, whether you rehire, and if you don't, there's lower forgiveness levels. So these loans are going to be provided by the banks. So as Allie mentioned earlier, reach out to your existing bank. If they're not an SBA lender, you are welcome to reach out to me. We're trying to figure out how we're going to approach this. We just can't handle the volume outside of current clients. So you are seeing a lot of banks that are saying, okay, we got to serve our current clients, whether they're a borrower or not. And then we go from there. I know how to navigate this. I can get people, like if they talk to their current bank, but they're not getting any response, I can help navigate to the SBA departments. That's where people need to get. Unfortunately, the SBA department gets hidden a lot for a lot of banks. It shouldn't be right now, but you might have some people that are still having challenges getting their bank to respond. So, reach out on that stuff. Be happy to provide guidance there. And then again, we're going to see some non-bank lenders jump in the middle of this, some fintech lenders that have the technology to move these things through quickly. There's no way the banks are going to be able to do it on our own. We got to do this all together. We'll do what we can. The other banks, other active SBA lenders will do what they can. Non-bank, we're, the only way we're going to tackle this.
Great. All right. Thank you, Scott. I just want to add Silicon Valley Bank, which, if there are tech companies that bank with them that are on the phone here, they are planning to offer this, is what I heard yesterday. Anyway, I'm going to move on to Nita Shah, the Executive Director of MISO, which is a CDFI and also an SBA. I don't know if they're an SBA lender or not, but Nita, you want to take on?
Yeah. I'm going to try sharing the screen. MISO is a micro lender and a technical assistance provider. We are a nonprofit, a 501c3, started in 2005 with offices in Gresham, Beaverton, and in Portland. So again, we are a SBA microlender, we are a USDA microlender, and then we are a CDFI, which is a Community Development Financial Institute. That means we are an unregulated lender. So people who are not bankable or cannot be banked, MISO provides loans from up to $500,000. So just going back a little bit, I know everybody has felt this, seen this, and experienced it, but really I come from the area of the community-based businesses like the small restaurants, the mom and pop markets that are around the corner, the barbers, the hair salons. So MISO helps about 800 to 900 of these businesses every year. It's been a total devastation for them. Their businesses are shut. Many of them are really going month to month as it is with their cash flow. And this thing has really put a hold on their earning ability. In 2007-8, at least there was this hope that you could open your food cart and you could make $100 a day. At this time, all that is gone. So it's been really crushing for many of our clients. There's a lot of hope. I have to say there is so much hope, and it's businesses that we support. It takes less time once things are back on track for them to roll out and start earning again. So we look forward to that day coming soon in Portland. Our community needed businesses, really what is happening is there's three things really: the flight, freeze, and fight. We are encouraging if you were already thinking that your business is not going to make it, it's not viable, maybe this is a good time to reevaluate and not get into entrepreneurship at this time. Freeze, we are advising them, don't panic. Let's look at other things that you can do. And then fight, really, that's been our 16 to 17 people at our organization are working every single day, calling all the clients that we have had in this last 2 weeks to encourage them really to get things done and be ready when things open up again. So, and even for this loan programs that are coming out, which are pretty exciting, to get their books in order, to get their taxes together, to get all the information that they need, and they haven't had time to get it organized, use this time to get organized, and we are supporting them in doing that. We are talking with, there's a lot of discussion about the pivoting, and, we are encouraging them to stay with the talent that they have and to, refine it more and look at like 7 different sources of income that they can make out of their business. So is this a good time to go online? Is this a time to package your things in a different way or to reach different customers in a different way. So, all of us at MISO are looking at every single business and coming up with a strategy that they can do in the next couple of months. We have started an online Open for Business platform where businesses that can really continue operating can be part of that, and hopefully, community keeps ordering things from them. As far as what MISO is involved in currently, it's many of the cities, like City of Gresham, well, almost all cities have come up with some sort of a grant or a loan program. So we are helping, and these are small micro grants or micro loans, but $10,000 grant, not bad. And that's what Prosper Portland has put out recently. So we are encouraging and helping our clients to access all of those grants and loan programs. It's City of Gresham, City of Beaverton, City of Tigard is going to come out with something. Washington County is planning on something. So really advising our clients to keep their ears open, keep looking for what is available there. And that's what I see the difference between 2008 and now, is there is a lot of support for the micro businesses. It's not just the bigger businesses of 500 plus employees. It's really the money is getting down to these micro businesses. So which has been really, really encouraging. And really, Sabrina, you talked about OCF and Oregon Growth Board. They have done a fabulous job on supporting smaller organizations like ours that are then reaching out to 800, 900 small businesses. So thank you for that. What we are advising again is really conserve cash. We have come up with templates that is helping our clients reach out to all the utilities, to their landlords, to ask for deferments and to hold on to their cash at this time. And it's been really successful. So that's been really, again, encouraging that there's, people are giving those deferments. At MISO itself, we have given a 4-month deferment to all our clients on the loans that they have. We are encouraging them to collect on their invoices if they are past due. We are encouraging them to communicate and contact their past clients or their current clients, build the credit relationships if you don't have. Generally we have about 80 to 90 people in our pipeline looking for loans. And again, it's, I think what has been out in the media and all that, right now we have almost 200 people who are in our pipeline for loans when we are able to start moving forward with it too. One big piece of advice we are giving is really, if you have had to lay off your staff, keep in touch with them, because these are trained folks that you will have to rehire when things open up. So really encouraging them to participate in all this. So that's a little about things that we are doing here at MISO.
Thank you, Nita. So I think what we've heard today between these 4 panelists is from 2 entrepreneurs who are saying, watch your cash flow, figure out ways of extending your runway, be creative, be resilient. I think resilience matter, and smart is what Nita was talking about. Is if your business is taking downfall, it's time to take a look at whether you really want to restart it or freeze it. And then from a lending standpoint, I totally agree. 2008, in this day of social media and communication, I think there's far many more resources and far many more people who are willing to help. And having gone through 3 of these myself since 1999, this is the worst. But the worst also brings out the best in us. So hopefully we'll all collaborate with each other. We have a very strong, one of the things I'm proud of being in Portland is there's a Portland metro area is that people are really rolling up their sleeves and wanting to help. And so take advantage of all the resources that you have available to you. TIE Oregon is a great resource. Come attend all of these events and network with us, connect with us, reach out to Carrie, reach out to me on LinkedIn. I have an open LinkedIn. You can send me a message. But these are trying times, and we want to support each other to get through this time. So we're going to open up for questions for the next 30 minutes. We're back on track. So the first question that I have is from, I'm sorry, I'm going to have to scroll on my phone. It's from Tamara Miller. She's talking about the affiliate rule, and not as an investor, but as an entrepreneur. Her husband and I have a few unrelated businesses in the sense that there's no industry overlap, but the ownership is the same. Can these businesses each get loans and grants, or will one only get? Who wants to take that question? Scott?
I'll jump in on that, because that affiliation is a squirrely topic in general with SBA, and I know, Allie, you had some questions around this. So to answer that specific question, those businesses would be combined from a size standpoint. So affiliates, even if they're unrelated industries, if you have owners that own other companies, like in this example, those would be pulled in for the size standard, which for this program is a very simple 500 employees or less. So as the question indicated, you're still small when you combine all of them, so you're okay. I do believe that you would actually apply for each business, though. We're digesting the guidance that's come out here in the last half an hour, but I do believe that you would be applying separately, or you'd be filling out an application. You'd apply with the same lender most likely, but you'd be filling out an application for each of those entities that you own, and they would each obtain their own loan there. So that's kind of specific to that. I wanted to touch on affiliation, though, in general, because they have tweaked that a little bit for the Paycheck Protection Program. The venture capital scenario, that is probably still going to pose a problem unless you can get into actually looking and combining all of the employee sizes. So, again, it's the 500 employee. If you're still within that, then you could be fine. There are some real nuances to that kind of ownership structure. You have other issues where if you've got a lot of minority owners, although this program does not come with guarantees. So no guarantees are required for the Paycheck Protection Program. So those are some of those nuances that we just need to digest this information. That's
Scott, let me stop you here. So how work when there is a company that has backing from two different funds, and neither of the funds on their own own majority of the stake, but if you combine those two funds together, one fund might have less than 500 employees in their portfolio, but the other company might have more. So how would it work in that scenario?
My answer to that right now would be that you'd still be including, you'd include all of them. So you'd have to look at the employee sizes of both of those funds. And if one was over 500 on its own, then you'd be outside of being eligible. That's my interpretation right now. Those are, again, the nuances, because they're not requiring guarantees. So that piece, I don't know how that's exactly going to work for a company with a different kind of ownership structure like that, that's supported by a couple venture capital funds, for instance. So now you also have a carve out. So they've made a couple changes to affiliation for this, though, but it's only dealing with a couple industries. It's primarily the hotel and restaurant industry. That 500 employee limit is per location. So if you had a 15 chain location restaurant, and we've talked to a number that are in that kind of, they're not national chains, they're not, but they're they're a local one that has a lot of locations. Historically, a full service restaurant would be 8 million in revenue. That's the normal size cap for that industry. But if you had 500 employees or less per location, then you'd be fine. So for instance, we're talking to one of our clients that has 40 million in revenue. They've got about 10 locations up in the Puget Sound area. They will be eligible for this, whereas normally they'd be well outside. And then that's the same for the hotel industry as well. Essentially anything in the NAICS category 72, which is accommodation, food service, is a carve out and qualifies based on 500 employees per location.
Okay. A related question to that from Jane Ullman from Silicon Valley Bank is, will the PPP loan subordinated to the existing debt?
That's a good, not formally. There's no collateral for these loans.
Right.
There's payment deferrals in the beginning, at least a 6-month deferral. I think that's approached it. See, the loans are 100% backed by the SBA. So from the bank's perspective, we're not, it's on our balance sheet, but we've got 100% guarantee behind it. So it's kind of approached a little differently than just normal, debt that people are going out and getting. This is a very different, kind of debt.
Okay. Another question is from Tim Taylor. For oral panelists, how do you anticipate this affecting the future of work environments? Do you think many companies will maintain and increase opportunities to work from home? How will that affect the office spaces companies that already have invested in? I can take that question and then we'll just pass it on. First Insight's been a virtual company for a very long time. We keep reducing our space. As our employees move out of state, we just keep them and they just work from home. I think that this incident is going to be a reset for a lot of different things, including a business that Ali is involved in. What I think people are going to start thinking about trade shows. People are going to think about providing employees more flexibility and working from home. I think if this goes for as long as I think it will, I think we're going to be in a new norm when we come out of it. Ali, you want to take it next?
Yeah, I think that's the scary part is looking at conserving cash flow. The last thing I'm going to do is pay rent, which is have an employee. So I'm going to keep employees as long as I possibly can. And if that means that we don't have an office to work in, I think people would much rather prefer jobs than have a cush office. So I think there's a lot of signs that are showing us that just like in 9/11, how it completely changed the way we travel. You think about airports, I think that this is going to completely change the way that we work as well. And I think we'll see some adaptation of that over the next couple of years. But to me, it all comes down to priority, and having an office is not a priority as it pertains to how we think about protecting our assets and our cash flow.
Okay. Anybody else in the panel want to add to this?
I'll jump in, Nitin, because we went, immediately from everybody working in an office, 2 floors in a building in downtown Eugene. We've got over 80 employees, and, to go from one day to the next completely virtual, it's been a process. It's something that we never thought we had to do so quickly. And to Ali's point, it does start to make us think about our cost. 80 some employees in a nice office in downtown Eugene, that's significant cash flow. Now, that being said, we've got a long-term lease in order to keep our payments down. So that's, there's a lot of complexity to how do you do it, how do you plan it, and how do you get out of it. But I think that there's no question that all of us that are paying thousands of dollars or tens of thousands of dollars a month for rent are going to start to kind of rethink things. Beyond rent, we were also just looking from our perspective on sort of all those other things that we're not paying for. So as a tech company, we bring in snacks. We try to focus on all healthy snacks. We bring in lunches for retros and lunches for all company meetings. And when you look at what we spend on things that seem like pretty basic benefits, you know, we're spending $60,000, $70,000 a year on that. That's a salary. So
Right.
it's been really interesting to not be in the office and start to reassess these things that we've taken for granted and that we spend money on. And is that where we really want to spend our money?
Yeah. I'll tell you that, you know, in our
Nitin,
office.
Nitin,
Go ahead,
I wanted
Nita.
to just add a little bit. I just, you know, most of our businesses are going to need storefront, and I think they add a lot of vibrancy to the community. And I just hope that, you know, things settle down, and it's like you need these office spaces, and then you need small businesses that we serve to go hand in hand to really grow the community and make the community vibrant. So I know this is like a scary time right now, and we are looking at our cash flow, but I do hope that that changes and that offices get leased again, and so that our businesses can also, you know, participate in the economy.
Scott, do you have anything to add?
Not specifically overall.
Okay. All right. No, I wanted to just add one final touch. So we have about 200 employees in India that were suddenly dispersed in their homes. And one of the challenges that we're having is internet power outages. And so our level of productivity is about 50% of what we would see if they were in the office. So I guess depending on where your employees are located, you know, working from home may not be the most ideal situation. So a couple other questions that are probably directed towards Scott. One from Jane, which is, will loans be evaluated and decisioned on a first-come, first basis? And another question was for new startup pre-revenue, does the PPP based on revenue, can such startups still apply? Scott.
Yeah, so that second one's easy, no. If you're pre-revenue, you're not, unfortunately, not going to be eligible. There is a provision. You don't have to have been in business during 2019. You could be a startup, but you had to have had revenue and essentially payroll costs in January and February in order to calculate what you might be eligible for. The processing, I mean, yes, essentially you could call it first come, first served. I mean, there'll be banks all across the country, lenders processing these simultaneously. You know, but each individual bank or lender is yeah, it's going to be a first come, first served. And you know, now that we at least have the application, they are saying in the guidance, I've been kind of trying to peek at it as we've gone along here. April 3rd is when applications would open for for-profit, and then there's a April 10th, or excuse me, for small businesses, nonprofits, for-profits. April 10th is independent contractors and self-employed individuals, so they put a little staggered date there. But April 3rd, essentially for most businesses, nonprofits, that will start, that's when the application process will begin that is for the Paycheck Protection Program.
So Scott, will they appear on every bank's website, or do you have to go to the SBA.gov to fill it out? Where would we go to do this?
Yeah, it's all direct with the bank. Now you can find this you know, information online. As this comes out, you'll start to see this stuff pop out there. So somebody could access the same application that we're going to be using. But to start the process, they have to connect with a bank. Doesn't have to be an existing SBA lender necessarily if their bank's going to participate, but they're going to have to talk to their existing bank.
Okay. Another question or comment was that it appears that the EIDL loan can be rolled over to a PPP loan. Is that the case?
So I have seen that. I have still not given official guidance on that is true. You can have a loan, as I mentioned earlier. You can have a Paycheck Protection, and you can have a disaster loan, just not use them for the same purpose. I still haven't seen officially yeah.
I was on the phone with Senator Merkley, and his staff outlined that you can do that. It's mainly for the very few people who have already gotten those loans or already applied for the disaster recovery loans. But if you have, and then you're eligible for the payroll protection program, you can roll the disaster loan into the payroll protection with the caveat that the amount getting plus the amount by payroll protection. Already gone out and applied for that loan and you're in process with that, you can roll that over. You may, and that's what Merkley's staff was saying.
Right. I want to caution there. I saw stuff from Merkley earlier this week that was unfortunately incorrect. I've seen stuff from Rubio's staff. I've seen stuff from Munchin that it's just misleading. And so I'm scrolling through the SBA guidance right now, trying to see if I could see if they had addressed that in they've got a kind of they've got a Q&A thing that they put out. Until I see that from SBA in black and white, that you can take your disaster loan and get that paid off with your Paycheck Protection. What I think might be getting confused there, you can do that. There's something called the Express Disaster Pilot Bridge Program. That can be paid off by a disaster loan. But again, so that could be very true. It could absolutely be the case. You could be able to roll it. I just haven't seen that from SBA, and until we do, I'm not saying that that's absolutely the case.
Hey, Scott, I have a related question personally. Is revenue loss included in this payroll protection plan? If a company suffers revenue loss as a result of shutting down or their customers shutting down?
In a sense, you're becoming eligible as a result of that. It's not tied to, disaster loans. What you're eligible for is tied more to loss of revenue. The Paycheck Protection Program is not when when they're figuring out the amount you're eligible for, but it is the same concept that people that are looking at both of those have lost revenue, on some level.
So you could do both then if you just targeted your disaster loan towards revenue loss and PPP towards protecting your employees.
Yeah, it is more use of funds. So you would not be able to use your disaster to pay an employee if you also use your Paycheck Protection to pay that same employee. That's where you can't commingle. But somebody was talking earlier, you could use your disaster loan and go buy inventory, and then you use your Paycheck Protection loan to pay your employees and pay your utilities. That type of stuff that you can do. Yeah.
Okay. I thought there was another question around. It's a pretty long question, but it's something to do with. I think maybe it is around contractors. Are they covered in this plan?
It could be. So you 500 employees. That's all types of employees. That's part-time. That's seasonal and full-time. Independent contractors. So you have to lump all of those. Yeah, exactly. So you got to lump all those together. But if you do that and you're under 500 employees, then yeah, you would be eligible. The problem I've heard with a lot of larger contractors is when you start factoring in the part-time side of it, it just balloons and they go over 500.
I see. So best not to include the contractors unless you're above 500 limit.
Yeah, I mean, that exactly. That's the cutoff, is the 500 employees. Yeah.
Okay. I think there was some question I thought around, would angel investors do the bridge? And I can take that question. I guess it depends on the situation with the angel investors themselves. I can tell you that in Thai Oregon Angels, we did a survey, and a lot of people were, they're sort of didn't want to make any immediate commitments to it. And I think it all depends on the deal and who's involved. And if you're currently an investor, depends on how your portfolio is doing in the stock market before you make those decisions, which is why we're telling all our startups, don't assume you're going to get a bridge loan from your investors. Don't operate on that assumptions, though there are venture funds that are investing. They just have recently raised money. I've been in enough forums to hear that they are continually investing, but I have not heard of any fund in my portfolio other than my fund Elevate that has offered to bridge anybody right now. So I think it's all a wait and see in terms of how things are going to pan out in the next month or so before anybody makes any kind of decisions. I know we held back on new investments. We are completely not doing new investments right now. We were already down that path, and we have some small reserves to follow on. But even those, we have to be really careful how much we parcel out to who, because it's all about survival right now. And we're trying to just help every single one of our companies to figure out a pathway to survive without any assistance other than what they might be able to get out of the stimulus. I think we're pretty much out of questions. If there are any.
I was going to jump in just from what you said about you're getting all of your portfolio companies to figure out their path without any assistance. And just, I don't know, Ali, if you're going to send out your slides, but I thought your kind of line of thought of how you looked at your business and thought about all your expenses is really vital for companies. Because I think what Nitin is saying is really important for all small businesses to hear. You've got to understand what's going to happen if you don't get any of this money and how you're going to survive. And you have to do it from that financial point of view. So I think that's really, really important. We are a business that sells all over the world to small businesses to help them figure this out. For Oregon, we're going to be giving our software away for free only to Oregon businesses. Oregon is a small portion of our overall sales, so we can afford to do that. I'll put it in the chat, but we will be doing a webinar on exactly how to forecast scenarios and just giving our tool away to only Oregon businesses so that you can do that there. And you can go through what Ali showed you on her slides, and you can create 2 scenarios, 3 scenarios, 4 scenarios very easily and on the fly, and using your accounting data as a starting point. I really think that's where people need to go first. To Nitin's point, you got to figure out, can you survive this and what does that look like? And then you can start potentially adding in, can I get the payment protection plan? Should I apply for a disaster recovery loan? Are there other options? But first, get really clear on your financials and what you would do without any of this, and then create additional scenarios.
Yeah, and
Well said. Go ahead.
So I'm happy. I'll probably remove some of the numbers out, but I'm happy to share some of the I have. But the number one thing that we did is we ran 3 different scenarios, and we had best case, middle case, and absolute worst case. And absolute worst case is a very real reality right now. It's very different than it was 2 weeks ago. And so I'm happy to send out templates. It'll probably be towards the beginning of next week, but I'll get hooked up with Carrie to be able to provide those.
Great. Thank you, Ali. I must commend you. Ali actually saw this coming before any of us did. And I think her investors are learning from her as we go through this process. So thank you for being so insightful and forward-thinking to see this coming for your business and taking the steps that you've taken to get through this nightmare. There's one comment that just came that said that you cannot confirm, you cannot, I don't know if it says confirm cannot count contractors. So I'm not quite sure whether they meant confirming it or whether that was a question. But with regard to PPP, please go review it, review those websites, ask your accountants, ask your banker as you're filling those out to figure out who you can count and who you can't count. With that, I'm going to hand the mic to Carrie to talk about some more events that are coming down the pike here to provide this ongoing assistance and sort of conversation about how to get through this next few weeks or few months of turmoil. Carrie?
Yeah, hi everybody. Just quickly, there was another question that was directed to Allie, which was, how are your, that I just wanted to point out because I think that it's relevant. How are your customers dealing with this, right? Do they want to hear from you? Are they kind of at their wit's end? Are they wanting space through this time? Are they working with you? Like, how do you approach your customers? I think we're all kind of feeling that way. Like, how much space do we give them, or do we engage with our customers?
Yeah, I apologize. There's like a hailstorm now, so I'm sorry if you guys
Of course.
I don't know what's going on. Yeah, what I would say is be a consultant to your customers. Be value add. It should have nothing to do with your product. It should be all about helping to enable them to get through the time. And so at Hub, we did a webinar that said, you know what, our entire industry is decimated and no one knows about virtual events. So we literally spent a week researching every virtual event platform that would be a competitor to us. And we hosted a virtual event 101, walked everyone through, here's what a virtual event is, this is what it means, and here are all the providers that you could go to get this product. So if you, and we had almost 1,000 people on that webinar with 2 days of promotion. And it's because people are craving it. But if you just send a random cold email to someone saying, hey, what about my product? Or you send a LinkedIn message that says, hey, you should buy my product, I can guarantee you people are not even going to give you the time of the day, and they will not respond to you once they're back to business at normal. Like, you need to be incredibly compassionate and think about how you lead from a best practice and a helping your customers to get through this time. And as a byproduct of that, you'll see sales.
Okay, great.
Thanks, Allie.
So,
Sabrina, do you have anything to add?
Just had to find my unmute. No, I think Allie's right on with that. And I don't think you have to be shy about promoting something that can be really helpful in this time. I think we're here all on Zoom. Zoom has clearly done a fabulous job of getting out there and promoting, and it's something everybody is using, and I don't think anyone is angry at Zoom for doing it. So I think there's a difference between promoting something that can be helpful but is also something you're selling versus taking advantage. And I feel like that's where you have to think through things and how do I help, but it's absolutely fair to also sell services that can be useful for people, right? I mean, one of the portfolio companies that Nitin has that is selling sanitizer. We all need it. We all want it. There's no shame in pivoting and being useful right now. So it's just a fine line of understanding that so that you don't, your customers feel listened to, respected, understood, but also if you have something that can help them right now, they are gonna be okay with you letting them know. So I would say just think about that line of taking advantage versus offering something that's needed.
Good point, Sabrina. Yeah, absolutely. People are hungry for solutions.
Right. All right. Well, yeah, let's go ahead and get into kind of next steps. We launched this series literally about 4 days ago, and we want to hear from you what's going to be helpful within the next few weeks. And I think what I'm taking away from this webinar is we're all still trying to figure things out. I mean, even the lending sources are trying to figure things out. And so I'm kind of thinking we do have a slew of events that you can see coming up on our screen here. but I'm wondering if it would be interesting to do just kind of from a lending standpoint, you know, after Scott and Nita have a chance to kind of dive into all these benefits that are coming out from state and federal government. If we do maybe every 10-day we have Nita and Scott get on the phone and just do a quick Q&A of, you know, here's the update. Because things are moving so fast, I want to be able to make sure that we're nimble enough to make sure that the member base has what they need. But so I'll send out a poll kind of just asking feedback around that, because I think that would be beneficial as we, again, try to figure out like what all this means. Nothing's concrete, and, you know, even from Ty's perspective, you know, we have people calling into us all the time, and it's hard to say where they need to go and the resources that are available. But in any case, what we do have concrete is next, as Sabrina mentioned, on April 1st, that's tomorrow, she'll be doing a create your own financial forecast scenario for SBA loans. I would suggest that, you know, send that out to all of your networks. It's going to be hugely valuable when you try to apply for all of these benefits that are available. And then next week at the same time, we're going to be talking to growth stage companies who honestly are probably dealing with a lot of the same things that you guys are. And so I think what I'd like to do is welcome Scott back into that discussion next week. If you're available, Scott. Then we have another event coming up on April 14th, where we're going to be talking to investors and talking about how are they helping their portfolio companies through this. So we're going to have the investors' point of view coming in. But we're welcome to hear other suggestions of how we can help bring people together and answer vital questions that you're all having at this time. So that's where we're at this time. We also have a COVID-19 response page that you can see at the bottom of the screen. Please check back there regularly. And Nitin, I'll turn it back over to you. Thank you, everybody, so much for being here. And
thank you.
Wish you all well.
Thank you, Carrie. And for those who are not familiar with TIE, we're a global nonprofit. We help mentor and invest and connect entrepreneurs. We provide a lot of resources to entrepreneurs worldwide. And in Oregon, you know, we've been around for some time. We've made investments, but our core of this organization is give back, and that's what we're trying to do. So please, if you would like to join TIE, the time to join is now, and we're offering a 6-month complimentary membership. But we'd love for you to be part of our team and take advantage of all of the resources and help that we provide to entrepreneurs, both in Oregon and thank you all for attending this event. We'll see you soon at our next event, which will be tomorrow, or sorry, day after tomorrow with Sabrina.
Thanks, everybody. And this was also recorded, so if you have colleagues that would like to listen, I'll make that available on our website as well. Thanks, everybody. Bye-bye.